Happy Halloween, everyone. Welcome back to my world of stocks. My name is Ale, of course. In honor of Halloween today, we are going to be talking all about the Halloween effect, which is a theory that stocks tend to take off after Halloween. And you know what, guys? Considering how much the stock market has crashed so far this year and how much fear and panic there is out there in the market, I bet you there's a ton of people out there that are sitting on the sidelines too afraid to buy stocks right now and really waiting for the next bull run to start so that they can feel confident and start buying stocks again. So in honor of that, in honor of all that scariness, spookiness of what's going on in the stock market and the economy, in today's video, I'm going to explain exactly what the Halloween effect is. We're going to look at historical evidence for it, and then I'm also going to apply it to today's current situation to see if there may be some validity to it and to see if stocks may be heading for a large bull run coming off of Halloween here. So it's going to be a fun one. I hope you guys enjoyed. Hit the like button if you do, subscribe if you haven't already, but let's go ahead and just dive straight into this. Okay, so straight from Investopedia here, the definition states that the Halloween strategy, the Halloween effect, or the Halloween indicator is a market timing strategy that is based on the hypothesis that stocks perform better from October 31st, or otherwise, known as Halloween, to May 1st than they do from the beginning of May through the end of October. So basically you buy stocks in November, hold them through the winter months, and then you sell them around sometime in April. And it coincides with another popular belief that you should not invest at all during the summer months, or what is typically referred to as the sell in May and stay away strategy. And there's no definitive explanation for these type of strategies, why people think they're successful, but some suggest that it's because the wealthy elites that drive the market often take vacations around that time, and so they're not there buying stocks. And then when they return from vacation, the market is kind of ready to rip higher again when you get closer to winter because of the holiday shopping season, as well as the end of the year budgets for corporations that try to spend any surplus they have, while also increasing advertising because of that holiday shopping rush. And there's usually political elections too, so that kind of stimulates the economy too. They tend to advertise a lot as well. So there's a few different reasons why people tend to believe in these strategies, but regardless of how accurate those assumptions are, this is ultimately a strategy that assumes that you can successfully time the market, which you guys probably know that I've never been a fan of myself, as I believe much more strongly in a long-term investing strategy that involves consistently buying good quality stocks, and especially when those stocks are going down, I increase my buying during those times, and then I hold those stocks long term for more reliable and kind of safer profits. It's an easier strategy and it's more reliable in my opinion. Again though, the Halloween strategy goes a little bit against that, as it supposedly shows better results during specific months of the year. So let's see if that's true. Okay, well, for starters, the strategy hates the summer months and it really likes the winter and maybe a little bit of the start of spring there. So let's see how that's held up more recently these past couple years, and then we'll take a look at more historical evidence too. Now, in 2020, stocks were definitely having a great start to the year through the end of 2019 and up to March, where the market, of course, completely collapsed. However, that was entirely due to the pandemic lockdowns that caused the entire world's economy to shut down. If you were to follow the Halloween strategy, though, and try to time the market, well, not only would you have held on to your stocks through March where everything collapsed, but you would have also completely missed the bottom that happened really fast right after that, while also missing the gigantic gains of the summer months because you would have sold out right before that. I'm not going to nitpick the Halloween strategy though that precisely, because 2020 was such a crazy and volatile year. So overall, I would actually say that the Halloween effect was still pretty damn close to being accurate around that time, considering that the market fell flat right after August and into September, but then rallied once more right after Halloween, which goes, very well with that strategy. Now, that rally continued well into 2021, which was pretty much a bull rally throughout the entire year, which doesn't exactly correlate with the specific timing of the Halloween effect, but even there, I mean, I wouldn't say that it was very off. It just so happened to be that 2021 was a year that was fueled so strongly by pandemic stimulus, where the United States, for example, spent more money, during the pandemic or on the pandemic than all of World War II combined. So, yeah, if you're going to create that much money out of thin air and then pump all of it into the economy, of course the market is going to skyrocket off of that. From there, though, it's been all downhill this year in 2022 because of the fallout of all of the economic failures during the pandemic, which has left us with record high inflation and rising interest rates, sending the stock market basically crashing all the way up to Halloween here. So the question is, does the Halloween effect work its magic right now and turn this bear market around? Definitely seems like the perfect setup for that to happen, right? Well, again, as much as I'm a critic of trying to time the market, I actually think that there are two giant reasons why the Halloween effect may actually be successful this time around. In fact, while I can't say when the next bull market will start, I am a strong believer that it's going to happen a lot sooner than people think, and that sets it up perfectly to happen at some point within the range of the Halloween effect. So let me just give you guys my two reasons why I think that that is a very real possibility. Okay, now reason number one for the general range of the Halloween effect is going to be history. History tells us that the Halloween effect is pretty damn accurate. Now, I know what you're already thinking. Ale, this time is different because there was a pandemic that literally like destroyed everything. And I know, I agree, I'm with you on that. But I'm going to come back to that in reason number two because I think I actually have a pretty good counter argument for it. But for now, let's just give the Halloween effect a chance and let's take a look at its history to see how accurate it's been. Okay, now this is from JP Morgan Chase, so definitely a very credible source, and they took these numbers from the past 36 years of the S&P 500, and on the left column here, it shows the Halloween indicator, which is the months of November through April, and on the right column, it shows the counter months, which are May through October. And at first glance, you may not really notice a big difference, but it's actually way bigger than you might think. First of all, the Halloween effect had 29 periods of positive returns versus 26 for the counter months, and that alone is not a very big difference, but that's because the market in general tends to perform very well over the long term with more up periods and up years than down periods or down years, which in this case was also a little better for the Halloween effect at only 7 down periods versus 10 down periods for the counter months. However, the big difference starts to really show when you look at how large the profits and losses were during those times. At first glance, it may not seem like a huge difference, with the Halloween effect posting average gains of close to 8% during the entirety of those 36 years, while the counter months only saw an average return of a little over 2%. So 2% versus 8% doesn't really seem like a big difference. Well, it's actually huge, because if you think about it, that's more than 3 times the gains for the Halloween effect versus the counter months. So imagine you make like $2,000 profit during the counter months. Well, the equivalency of that would be almost $8,000 during the Halloween effect. Or if you're like a rich elite, you can think of it as $2 million, a $2 million gain versus almost $8 million that you would have made during the Halloween effect. That's a gigantic difference, guys. Getting more than 3 times your returns is a huge deal. And not only does the Halloween effect perform better in general, and not only does it have more up periods with bigger gains and fewer down periods to go along with it, but even those down periods are also significantly smaller losses. So even if you invest during a down market, you're still going to lose less money during the Halloween effect versus the opposite months. And to add even more credence to this time in particular having a big Halloween effect, well, one thing we know for sure is that technology rules the world, and thus the stock market is extremely dependent on it and it's heavily affected by it. And it just so happens that if we look back at the tech-heavy NASDAQ index for the past 50 years, with the only exception being the dot-com bubble, the NASDAQ has absolutely skyrocketed over the following year after entering any bull market, which is considered a gain of 20% or more. In fact, even if you include the dot-com bubble, which was a ridiculous time period for valuations, well, the NASDAQ still shoots up an average of an additional 14% in the 6 months following a bull market, which is even more at 12 months, posting an average gain of an additional 23%. And guess what? It just so happens that our own NASDAQ of this year actually had, in fact, a bull market of its own around June and July, where it shot up about 22% from the bottom. Now, since then, the market has crashed back down, but if history repeats itself like it has for the past 50 years, then the NASDAQ would have to skyrocket very soon, especially to make up for the large amount that it's currently down following that bull market, which would just so happen to line it up perfectly with the timing of a new Halloween effect. However, that's going to bring us back to the question from earlier, which is, isn't this time different because of the pandemic? Well, I would say maybe not. That brings me to reason number two, my counter argument for that, and reason number two for why I think the Halloween effect has a very real shot of being successful this time, and that is that the fallout from the pandemic has, in my opinion, crashed the stock market by so much already that I think it's getting to the point where it's looking overdone and oversold, and thus I actually think that a bottom for the stock market might be a lot closer than people think. And if that's the case, then it's setting up the Halloween effect perfectly to rally off of it a lot sooner than people might think. So let's break that down. Why do I even think this? Well, for one, stocks themselves are looking really cheap. The S&P 500 is already down about 20% from its highs, while the NASDAQ has suffered a giant crash of over 32%. And on a valuation basis, ever since the 90s, the price to earnings ratio for the S&P 500 has not only traded way higher than the historical average, but it's also been consistently higher than a base of around 20 for most of that time. Yet today, the PE is only around 17 or 18. The S&P 500 is also trading about 23% lower than analyst price targets, which throughout history has almost always marked the bottom of a bear market when it trades around those levels. So that may be coming here soon. And in my opinion, this is because there is a clear disconnect between where the market is currently trading and what reality is. Because look, everyone is still shopping on Amazon, yet the stock has lost almost half of its entire value. Everyone is still using Microsoft software, yet it's lost a third of its value in what is the biggest crash that I've ever seen in the stock. Everyone is still using the internet and searching things and navigating and using phones, but Google stock is down almost 40%. Everyone is using social media as much as ever before, yet Meta stock has lost 3/4 of its entire value. Everyone is still using their phones and internet, yet Verizon is trading at the lowest levels in over a decade with a dividend yield that has now risen to its highest level in history as well. Everyone is still using and buying and upgrading computers, and gaming, cloud computing, and artificial intelligence are just as important markets as ever, but Intel stock has lost more than half of its entire value and is trading near the lowest levels in the past decade, with also a dividend yield that has risen to its highest level in its entire history as well, while Nvidia has also crashed by 60%. Asia is still the biggest and hottest market in the world with by far like the most people, and there a lot of them, ton of them are still shopping online, yet Alibaba stock is down a mind-blowing 80% to the lowest levels in over a decade, while the Google clone in Baidu is going through almost the same exact experience. And you're just seeing stocks here that are trading at historically like extremely low levels. It's not just like they're trading low from a few months ago or they're trading low compared to 2021. No, some stocks are trading at the lowest levels since the Great Recession. This is really unprecedented how low these stocks are trading. And you don't even have to look at stocks themselves. You could even just look at the economy and the issues going on there. Now, granted, there are a ton of underlying issues with the economy right now, so many to deal with. But I think a lot of them are actually being heavily addressed right now. Take, for example, the whole supply chain issues. Well, We know that one of the biggest concerns, one of the biggest factors for the stock market crashing has been inflation, and that's because we've had supply chain issues. Well, the creation of money, but also supply chain issues where we've had a lack of supply, and that's sent demand skyrocketing and prices right along with it. But we know that supply chains have been getting restored recently, and if you've paid attention to any of the recent earnings reports from some of the biggest retailers in the world, then you would know that a ton of them have been reporting weaker profit margins because of a ton of overstock that they've been having to deal with, that they've been having to put on clearance. And this has been the case with major retailers like Target, Walmart, Amazon, all reporting weaker profit margins and even weaker guidance for the next quarter because of this balancing out of supply and demand. What's another concern? Interest rates, right? Because of that inflation, we've been having to raise interest rates, but that too, I think, is being dealt with. Okay, not only are we dealing with the supply chain issues that should help ease on inflation a bit, but we're also raising interest rates at the highest level since the Great Recession. And when you raise interest rates by this dramatic of an amount, it will eventually take effect on inflation. And once that happens, you will very likely see interest rates flatline and eventually drop. In fact, the Fed has been hinting at that recently, saying that they need to be more cautious with it. They've been hinting at slowing down the rate hikes and maybe even lowering them if they get inflation under control, which I think could happen a lot faster than people expect. And if that happens and interest rates start to go down, the stock market always skyrockets when interest rates go down. They always have that inverse relationship. So if all of those things take shape, and again, anything can happen, but if those things take shape in the coming months, you're talking about huge ammunition for the Halloween effect to have a monstrous rip here. Again, I'm not someone who tries to time the market. I am a long-term investor and I have never believed in those type of strategies. But when I look at it here, if you want my opinion on it, I think there is a very real shot at the Halloween effect being very successful this time around. And it would not surprise me at all if the stock market sees its next bull run start within that range. So anyway, those are my thoughts on the Halloween effect. That's how I feel about it right now. I'd love to hear what you guys have to say. Leave your comments down below. Do you agree with some of my thoughts and predictions, or are you completely on the opposite side of me? And if so, I'd love to hear why. And I'll respond to your comments and we'll have a fun chat. But I hope you enjoyed the video. Hope it was fun for you to listen to either way. Hope it was entertaining for you. And I hope you're all doing well. And thank you for watching the video. And I'll catch you in the next one. All right. Happy Halloween, everyone. Take care. Bye-bye.